it reaches out and touches the 4.236 perfectly. So that gives us a little bit of reasoning on why, okay, we can reach out and hit that target. Hey, what's going on, everybody? This is the Blockchain Backer bringing you the latest cryptocurrency news and analysis. And today is Friday, and I figured, hey, why not take a look at all the bullish targets that we've got laid out for XRP? Earlier this week, I did do a live stream, and the most common question I got in that live stream was, what are your targets? So I responded to that by creating a video talking about, well, we have to figure out if this market's doing a retrace or if it's going on a new bullish impulse. Well, I talked a lot about the retrace, and we didn't talk a whole lot about what the bullish impulse would be. Now, I know I've covered these targets before in the past, but it's always fun to kind of revisit them and remind ourselves what we're really here for, right? We're not here to just get a retrace and exit and move on with our lives. We're here for the big one, right? We're here for the life changing, the system changing, the leveling the playing field kind of targets, right? So here we go, guys. We're going to run through the targets and take a look at what we're expecting and the potential of it occurring soon. So let's dive into the charts. First, before we get started, let's take a look at just like the market on like a monthly time frame really fast. This is XRP on the monthly time frame. Obviously, it's still just kind of chilling when we take a look at it like this. But the one that's really taken off and showing you that this market is something is changing here is Ethereum Classic. Now, let me preface this by saying I'm not telling you to go buy Ethereum Classic. I'm not telling you that I think Ethereum Classic's going to turn into anything. I have no clue. But I do see that that's a very clear double bottom, and that's also a very big green bullish engulfing candle. So there's your double bottom. This did not set a new low here. And then we have this monstrous green monthly candle with the volume to go with it. So we're seeing some changes here in the market right now that we haven't seen in 2 years. Also, when we look at the altcoin market cap as a whole on the monthly time frame, we could see that we've clearly broken out of our downtrend. Now we have yet to set a new high. Let me set it on the weekly time frame. We are just right on the verge of setting a new high. So if we can get over there, that creates a higher high, but it does look like we're out. Does look like the downtrend has been broken. Hey, things are looking positive right now. I'm going to turn off some of these indicators and kind of clean it up, because now we're just going to start looking at XRP, and we're going to start looking at the targets that we're looking for in the next bullish cycle, which could be coming very soon. All right, so first things first, let's lay down the groundwork of where we are. Now, a lot of you have seen this before, but we're going to do it again. We're going to lay down the groundwork of exactly where we are in this market cycle. In 2014, we pulled back 95.5%. In 2018 and 2019, we've pulled back 95.5%. Okay, so we can all agree that the percentage pullbacks were the same. Next, we have to figure, well, where are our targets from based off the bottom? If we were going to have a market cycle repeat with percentages that were similar, where would the targets be? Well, the first thing you could do is you could grab just the bottom and repeat the cycle. And that would be your first attempt at trying to forecast how high this thing will go. If we mirrored the exact same pullback here, then it's not unrealistic to mirror the upward momentum, the upward targets as well. If you need some evidence to see that that does happen, here's the historical chart for Bitcoin dating all the way back to 2010. And what we're going to do is we're going to take a look at this point right here and this point right here. And you can see that if we just copy this exact fractal right there, and then we grab it and place it right here. So cycle number 1, and then the next cycle took us right up to there. So it does happen. Okay, let's go back over to XRP. Now that does give you a finishing target of $234. I'm not here to tell you whether or not I think that's a realistic target or not, but we'll keep an eye on it. Let's just mark it for now and say, okay, this is most likely the craziest target that could ever be reached out to, is this $234 area. Most likely the highest it could go. Now, when I do a lot of these technical analysis videos and we're looking into just specific targets, some of the most common types of comments that I receive are, well, no, see, you have to understand it's going to be based on utility. This thing's going to 4 digits. This thing, it's going to be leveling the playing field and all this stuff, and you don't get it. And it's like, well, wait, let's just step back. I get it. I get it. Like, right, there's fundamental use cases here, and there's a potential for something crazy to happen. But we have no way to forecast that. We have no way to measure that, and the only thing I can do is actually just measure. And so I'm going to create every target that I make here based on measurements, and that's it. So everything that you see me do, every target that you see me pick out, there's going to be some reason why I pick that target, and it's going to be specifically based on measurements. And that's it. So let me clean this up and make it a little bit smaller because we're probably going to get a few of these here on the chart. There we go. And we'll put a little horizontal ray right in the middle just so we have there we go, 221. That's good enough. The second one that we see right here just from doing this. Now remember, all we did was we copied this fractal starting at the 95% drawdown, copied it and pasted it here. I'm not telling you whether or not I think these are the most realistic targets. All I'm doing is telling you, hey, if we do an exact repeat, this is what these would be. So here we go. Let's add this one right here and we'll put a little ray right in there as well. Boom. All right, now we got our second mark, $26, $221. And then this is the one that stirs up a lot of controversy when I bring it up. It's just this little target right down here, which is like around $1.50 to $1.70. So there it is, $1.66. Now this would be just if we do just a regular old retrace and then consolidate again for a longer time period before we do a lift off. Now, this does happen, this is common, but there's the potential that we're not doing that simply based on the structure of this right here in comparison to back here. This is very, very, very similar. I'll do a little bit of a diver deep into why this right here, this ending fractal of our current market really matches up to the ending fractal back here. Most people have seen this, but when you dive into it with the Fibonacci retracement measurements, it really, really shows you what's going on. So we'll dive into that here in a minute. I think it is more likely that we are going on a bullish market than actually doing a retrace just because time has really elapsed. When this market fell back in 2013, this only took 8 months to come down. And then, we went and did a retrace and then consolidated. However, this has taken 2 years or 24 months to get all the way down here. So the structure of it is different. It's had little tiny retraces on the way down, but yet I have to say it's never had a full-blown retrace, which is like a 0.618 Fibonacci retracement or even half of a retracement. So we haven't seen a retrace on this thing yet, but that's neither here nor there. We're looking at big targets, and I think this is probably unlikely given the fact that we've spent so much time drawing down this 95%. Okay, so we're going to finish up with fractals for now, but we're actually going to come back to them again later. So the next thing we're going to do is we're going to pull out the Fibonacci retracement tool. And when you're measuring new bullish markets, it's really, really difficult to figure out, well, how high can this thing go? And a lot of times you'll see the euphoria and the excitement and the unrealistic, insane price predictions happen once this thing breaks out into new highs. There's nothing over here on the left side to tell us where the resistance is. So let's, for example, right here, while we're way down here, we can say, well, we probably have a resistance right there. We probably have one right there. We probably have one right there. And we most likely have one right here at the top. Because, well, we've had resistances there before, so we can easily pick those out. But when we start breaking into new highs, then that's when things start getting really crazy, and the people who haven't prepared for it ahead of time tend to get unrealistic expectations or emotionally get shaken in and shaken out, and it becomes wild. So I always set my targets way ahead of time on what I'm going to pick. And now the reason I do this is because I've seen this stuff work in the past so many times, and we use Fibonacci retracement and we do Fibonacci analysis to forecast the extensions that it's going to reach out. And that's it. So first thing, we'll grab our Fibonacci tool and we'll lay it over just like this. So you start at the very peak, right here at the top, all the way to the bottom of the trough. Now, if you want to select this and do this yourself, it's not going to automatically have it set right here. It's going to have the trend line set right there, and it's going to have pitchfork right there. So this is what your screen will look like. You'll click on this little arrow, come down to fib retracement, and there you go. There's your tool. So look at that. My line actually it actually came out to right there. Okay, all right, but that doesn't matter. So what we're looking for is we're going to be looking for a Fibonacci extension right here at 4.236. So my target, if we can get beyond this zone, if we can get above, like, let's say $2, I'm expecting us to get all the way out to at least $13 to $16. Now I have to draw this area a little wider. I think the realistic target is much closer to 13 rather than 16, because on this chart that I'm using, this is CoinTrader. CoinTrader takes into account a lot of different exchanges, and it pulls this data from CoinMarketCap. So CoinMarketCap at the time was pulling a lot of different data from different exchanges, and they registered the top coming in at about $3.90 during the 2017 bull market. However, on most exchanges, it only came in at about $3.30 to $3.40. So this target is being based off of that $3.84 or $3.90 top. So we have to take into account that different exchanges had different prices. So we have to create these big zones. So in this Fibonacci extension, we're looking at the zone up here between $13 and $16 as our first major resistance level. Next, to go beyond that, we'd stretch our Fibonacci out so that the peak of the bull market and the bottom of the trough market, the bottom of the trough in the bear market, line up like this with the 0.236 at the top, and our Fibonacci extension takes us all the way out here to 66. I think this zone is actually in between like 55 to 66. So we'll put a mark in there. Let me add one back down here first, and then we'll add one right here, and there we have it. Now you may be saying, well, wait a minute, this is crazy. I've never seen anybody do this before, but well, I've shown this quite a few times, but that's exactly how Bitcoin reached out to its bull market. As you can see here, that's exactly how the measurement worked out. We lined it up with 0.236 on the top, 0 at the bottom of the trough in the bear market, and exactly we reached all the way out there. So not unrealistic to set that as your target for a new cycle, and I certainly will be. So back over here, you can see there's our target. As you can see, that's our target right up in here. Next, what we're going to do is we're going to take a look at the fractals again to really line them up and see if we can find a better placement for fractal bullish targets. The most obvious thing in regards to fractals and fractals lining up was that this fractal right here looked identical to right here. We can overlay it, and look how absolutely perfect it was, and we'll zoom in on that. Look at this thing. We've got the three little blips right here on the top. They overlay absolutely perfect. Look at how this thing was just lining up absolutely incredible, and then something happened where it just didn't play out like it was supposed to here at the end. However, we could see that it actually still is playing out this exact way, and that's if we kind of stretch this thing out a little bit and make it look like it's supposed to. You give it a little bit of time and stretch, and whoop-de-doo, there you go. The time is starting to now line up just like that. So in this circumstance, where is that taking us to? Well, it's taking us to new higher targets. And this is where things start getting a little bit tricky, because now we have to start speculating on the exact placement of how you stretch that fractal, and does that actually even impact the pricing of it? And I just, I've looked at it a lot, I've played with it a lot, and I really just don't see how you can accurately do it. I think you can stretch it, you can make them match up perfectly all you want, but in the end, it's so speculative on it. I just don't feel super confident saying that's a target we're going to reach for based off of the stretching of this fractal that I did. It just doesn't feel right to me. I don't feel confident like slapping my name on it, because I'm cool with, saying, hey, retracements, they look good, or Fibonacci extensions, they look good, or we copy a fractal, we put it on, it looks good. But when we start copying fractals, placing them on top, and then stretching them to fit the way we want them, and then making our extensions out based on that, gets a little iffy at that point. So I want you to keep that in mind, that there is the potential that, hey, maybe things are changing and we have to stretch this out, because when we come back here and we run the Fibonacci's over this is identical to what is going on right now and has been for the last 6 months. This entire downtrend and the reactions that it's had at these specific Fibonacci retracement levels is identical to what we're having right now, right here. So I'm going to take this off the screen, the one that we overlaid. And this is our current time. And there you go. This is an identical matchup to what was occurring back in 2017 before it took off. So this matches that identically. Now, people are saying, well, no, it doesn't, because when we overlay the fractals and we put them on top, they don't match anymore. Correct. From a time perspective, they don't match anymore. But from a percentage move and what it's doing and how it's reacting on its way down, it is identical. There's no question it's identical. There you go. I mean, it's the same thing. So I'm not comfortable making a forecast based off of that right there, just by us stretching it out. So let me take these off the screen. And the only thing I would feel comfortable doing with this is to keep in mind is that, hey, well, if we overlay this ending and we say that we're taking off like that, right? So this was the bottom of it. If we put the bottom of it right there, where does it take us? Well, it gives us our first reaction level right there at the spot that we forecasted with a Fibonacci, right? So we take our Fibonacci's and put it out there, kind of line it up like that. And well, that gets us right to that target that we expected. So, okay, that's the second kind of confirmation for this zone, that $13 zone, which is why you've heard me talk about it several times, is we have multiple things that say there's the potential for that. Then if it does exceed beyond that with this fractal setup, well, it takes us all the way up into the $125 region. And then it just kind of blasts through all these and gives you this new target right here, right around $120. So let's mark them on the chart. We got $1.60. We've got $13. We have $26, $55, $120, $220. And there you have it. And a lot of people say, well, why would they ever, why would the powers that be ever allow us retail investors to buy the bottom? People will get shaken out along the way. They won't know which one's the top, which one's not. They'll FOMO in, they'll fear out. And, just because you bought the bottom does not mean you'll ride it all the way to the top. You may not. There will be some people who ride it all the way to the top and make their perfect sell and they nailed it. But most people won't. So don't ever think that this can't be the bottom just because, retail can't buy the bottom. Sure, retail can buy the bottom. Retail can also sell tops. You can. You just have to be prepared for them and make your plan ahead of time. And that's what I spend a lot of my time doing because I've been in these bull markets before. And when they go really, really fast. And if you didn't have a plan ahead of time, you kind of start making some emotional decisions. You start saying, wow, I've made so much money. Now it's going down. And oh man, I was in this bear market for so long and I really just want to, this is a good start to me, like really changing my life. I think I'm just going to sell here and I won. I did good. But, did you really? Did you get out too early? That's why I like to make all the different targets. I have different percentages that I'm going to sell at each target, and we just kind of take our way all the way up there. And in my own mind and on paper and talking with my wife, there's certain goals in our lives that we'll achieve at each different target. They're nothing crazy. We're not talking about going out and buying a Lambo or buying new cars. I probably wouldn't even buy a new car if you gave me $1 million today. I've paid off my cars. I'm enjoying the life of no car payment right now. We just paid my wife's car off last month. It's feeling good. I just, I'm going to live comfortably and I'll probably go buy like $10,000 of half dollars and search it for silver. That's probably what I would do. And then, of course, I would take $9,990 back to the bank and say, here you go, I don't want these. Yeah, but probably the biggest target missing on this chart right here is the people who are saying, well, wait a minute, what about the 500 plus target? Well, okay. Let's see if we can make it work. There's one way we can make it work, and we've got to dive back into this time period, okay? This is the only way I can get 500 to show up on this chart, and here we go. All right, so we line our Fibonacci's up like I was talking about earlier in this video, and let me get that off the screen. So we have the 0.236 here at the top of this peak, and we have the 0 down here at the bottom of the trough, and then magically it reaches out and touches the 4.236 perfectly. So that gives us a little bit of reasoning on why, okay, we can reach out and hit that target, that 4.236 target that we set out right there, because, well, we've done something like that in the past. That's that $55 range. Well, okay, but it reached out to here, just like it did right here, but then it went out a little bit further. So let's measure how much further out it went. It went another near 800% higher after reaching out to that target. So what happens if we reach out 800% beyond this target? Zoom in a little bit. We need to get that to 794. There's 795. Close enough. And what price does that take us to? That takes us to right at that 595 area. Let's see here. We'll go in like this. We'll lay a ray down right there. And boom, 595. Well, that's pretty close to 589, isn't it? A little ironic. So, all right, let's take that off the screen. Let's get all this off the screen so we can see a little bit better. Get them all off here. And then we'll write it in there, 589. So there you have it. There's all your different price targets for a bullish market. Obviously, this one right here is just if we do the retrace. That's if we just do this one. If we get beyond this zone and we get above $2, I expect us to get up to here. And with certain, completely believe we'll at least get to 13. That's my first major target. 26 is possible, but I'm really thinking 55 is more likely. But I hope you guys enjoyed this, and I hope you enjoyed me talking about my different targets. I am going to be doing a live stream later today, so thank you guys so much for watching. If you enjoyed this, please hit that thumbs up button, give it a like. I appreciate that. Let me go ahead and do my outro here. Thank you guys so much for watching. Please like this video and subscribe to my channel so you can be notified when I go live and upload new videos. As always, this is not investment advice and I am not a financial advisor. But if you ever need a pick-me-up or a little bit of reassurance, just remember that the blockchain backers got your back. Have a good one.